Hey everybody, it's Dan Hussey here. I'm doing a quick video on the yen crosses. Particularly, I have a chart up of the Aussie yen. And I wanted to take a look at the setup that we actually got long at the 85.44s. And we have not been stopped out yet. As a matter of fact, the setup has yet to be invalidated, which would have been a break below the 84.80s, which has not happened. On two tests, they've defended the 61.8. And even after the GDP sell-off, which is this candle right here, we immediately rallied off that. And I do expect a break higher sometime, sometime today, sometime in the Asia session. We are holding a measured move short, so any break move on, if you're not already in this trade, any move above 85.60 would be the invalidation for shorts. There is the potential for us to hold 85.75, so we want to see us back above 86 for a full confirmation that the long trend, or that longs have taken this market back, so to speak. So 85.60 and 86 even are the levels to watch. Now, the setup that we actually ended up taking, there we go. The setup we ended up taking, and I'll show you how on all the yen crosses we seem to be having a very similar setup being played out. And it's one that's occurring from the top that occurred on January 26th. That high to highs, 50%. If you draw up the Fibonacci retracement from that high to highs, we have what's called an extension long. The yen crosses have been on such a tear that they've blown out of making what are called traditionals and have moved into extensions. And extensions will continue until they fail. And this extension is valid with an 89.20, where we take profits at 89.15s. And the Aussie yen is the only cross that I am fearful that this extension might not hold, and it could potentially hold an extension from drawn from, sorry about this, the highs on in December to highs. It ends up coming into being very similar. So if we are taken out of this position for whatever reason, I will be looking to re-enter into the position at the 84.30s with a 100 pip stop. And then the target for that trade is up almost at 90 even. Now here's how the other markets look. Now let's look at the euro yen, because I know that there's some other traders out there with a euro yen long, which I love. It looks to be like a 106 even buy with a 100 pip stop, looking for an extraordinary 500 pip target at 111s. This extension long, we haven't, this market, I do believe we might have just broken out of shorts. Let me double check this. No, we haven't. We will break out of extension shorts. Went up and tested this 61.8, so this market too needs a little bit higher to break out of shorts. So once we see these markets start breaking out of these shorts, particularly the euro yen above 106.45, 106.50, I'm going to start buying the dip, buying the dips in multiple markets. The pound yen happened to have one of the cleanest. It's actually the most bullish out of our yen crosses. It's actually not even trading to, and it never has traded to, an extension off the highs. It has been trading an even higher level from the 123.50s anchor to highs. This was a 126.65 with a 131.25 target. So again, the pound yen seems to be more bullish in the setup it's holding. Its anchor is a higher anchor at a later point in time, so it's holding a more bullish setup. CAD yen, very similar to pound yen, also showing CAD strength. CAD yen is one of the markets where we actually show this extension trading very cleanly first time. And you can see that setup was an 80 buy, 80 even buy here for an 82.65 target. Same anchor, new high. Absolutely beautiful setup. Didn't barely dipped in, and it's looking from only for a 400 pip target about 84 now, off of an 80.50 buy. So like I mentioned, the second we see the short trends break in this leg down, which I'm watching on a 15-minute time frame, because this would be considered an hourly trend, the long we're trying to get into. As soon as the 15 minutes break, we're going to start buying the yen crosses almost across the board. Swiss yen holding pretty much an identical setup to the Aussie yen and the Euro yen. It's not as bullish as the CAD or pound, but it's certainly a very bullish looking setup again. Same, the January 26th high to the February 26th high. It's an 888 even buy with a 92.80 target, so 480 pip target, and that trade as well for what looks like 87.22s. So pretty soon here, once we get confirmation. Okay, I'll take a look at the dollar yen as well. The dollar yen, here we go. So here's its. I'm sorry. You can notice on the dollar yen that we actually never we're still in a previous extension that hasn't made it to its target. So I have an inclination, or I've got a kind of a theory here, a thought that the dollar yen may never end up coming down to fill 80s here, to make it to an 82 target. It does seem like, maybe if we go look at a 4-hour chart, to me the dollar yen seems like it is losing steam when compared to the others, and that is kind of a good thing. Reason being is we're looking for risk appetite to pick back up, and risk appetite is going to need the dollar to come off a little bit. And I haven't actually done this yet, but I'd love to take a look at what a daily 20 years. Look at a daily chart looks like, just to try to see if we can figure out what they were trading. All right, so we obviously have a halfway back short. Hasn't made it to target, actually. And look at that. Okay. So inside this range, to help us down into it, the dollar yen seems to be holding an invalidation level for a very, very big short trend, and a break above highs, a break above 82 would invalidate that. So it looks like there's some more downside pressure on the dollar yen. In other words, I just feel like there's downside pressure on the US dollar more so than on the yen crosses themselves. So we have what looks like some great bullish setups in all the yen crosses. This is the big pullback that everybody was kind of is going to wait for. A lot of people are waiting for bigger pullbacks, and I just don't believe we're going to get it. I guess while we're here, I do see a setup on the euro that could play out here in the next, into. This is what I'm looking for into the European session tonight. So euro's been on a pretty big tear to the downside. It is holding extension short, traded once to target, and is now actually trading a second time. It is holding this extension short at the 31.46s. It's only got 10 pips. It only needs 15 pips higher to get above 131.60s. Above 131.60s, we validate the series of shorts, and we'll be able to buy a pullback. And we'll try buying that pullback because it will be the first 15-minute short break that occurs in this downtrend. And if the euro, even if it's going to trade all the way halfway back short, which lies all the way up at 133 handle, if it's going to trade up there, there's going to be a micro move, or potentially a series of micro move longs that take us up in there. And we want to try to get into one down here. If you can get into one low enough, you could potentially be in a swing trade long up into this short, because we'd be holding longs into the short you can't just take blindly. You have to wait for the 15-minute longs to break on the way up. And once the longs break, you're out of your short, your long, and you flip short. If the longs don't break, we will just go straight up and through, and eventually straight up to the 136.50s. And not saying that will happen, because there's a lot of resistance above now in the euro, because the euro has a daily short that traded, and there's a daily short that traded at the 34.40s, and I'll cover that in another video sometime. 34.40 is a daily short traded, and it does have the potential to pull all the way halfway back to 133s before it continues lower. So we're gonna have a big influx. You know, we need to see euro price action up to the 133 handle, and we will either go straight through it and up to the 136s, or we won't. We'll come down. We'll go down to the down to its targets of the 130s evens. So that's all I got for you guys. We're watching some good setups here. What look like to start playing out in all of our yen crosses. So we're going to start buying the dips here as soon as possible. Lastly, I posted this chart on Twitter, and it's probably going to be the most important chart for the next year. It's the S&P 500. And we're playing out just like we did in 2010. Here's in 2010 the sell-off, the flash crash, the May flash crash, and the sell-off then ensued afterwards. After that sell-off, we held an extension long, and after that extension long, it blew through targets and continued on, to your daily targets, which are up at the 1370s, and it hit those targets. So likewise, from these lows here at the 1000s, we have a 1500 target, and what we're expecting is to hold support here and then continue in a leg up, just like we did in 2010, to our daily targets that we've been calling for, those 1490s, 1500s up here. So that's what we're looking for in the S&P 500. Going to get support here sometime within the next 10 points lower. It's going to be between 1320s and 1333s. Interestingly enough, if you look at the June contract, because I have the March up. Oh gosh, what is it? Yes. Whatever. Don't really care what it is right now. If you look at the June contract, it actually traded this level today. We have yet to come to it in the front month, but with roll coming up, there's a possibility we never see it, and we just hold the low right here. So I'll also note that the last time we traded this type of level, it chopped around for a week and a half, between a 50% short from highs to lows at the, and so we expect some sideways price action now between these two levels until the market figures itself out, builds stops, and then gives it the ability to rip out or break down. So, but we are bullish while above, certainly bullish while above the 1310s, and at the very least 1322s. So, all right, that's all I got for you guys tonight. Have a great night, and I'll be back with you as price action develops.